How to reduce capital gains tax on investment property, part 3, mate.
That's right, in our 2 previous videos we have demonstrated that capital gains tax
Is not a tax.
and what exactly it is, and our top 3 tips for reducing capital gains tax. So that leaves us today with our top 3 strategies to reducing capital gains tax.
And also we have a special gift for you at the end. And it's not a tax either.
So kick up your feet and let's put a fork in it.
Because there is no fork, mate.
Today there is, mate. So to put a fork in it, once and for all, let's look at the exact wording on the ATO's website. Although it's referred to as capital gains tax, this is actually part of your income tax, not a separate tax. It's not a tax. As capital gains can be broken down into 3 main components: 1, ownership; 2, time; 3, cost base. So by the end of this video, our aim is to give you a strategy to attack each component. So let's get straight into it. Component 1, ownership. Whether it's in an individual's name, 2 individuals' names, or even an entity's name, such as a company, there are a lot of different things to consider when it comes to ownership. It not only deals with the rights of the property, it also deals with asset protection and the way banks look at you when lending you money. But for capital gains tax, it's more to do with the ownership of the property and the tax rate that is used when calculating how much tax is to be paid.
If it's an individual, it could be up to 47%. If it's a company, up to 30%. Super in the accumulation phase, 15%. Or in your super and in the retirement phase, nada, to my Spanish subscribers. So by thinking ahead, it can save you thousands and thousands of income tax. So before purchasing, make it your strategy to see an accountant and mortgage broker to work out what's the best ownership structure for you in relation to tax, lending, and asset protection before going into a deal. Before.
Component 2, time. As capital gains is added onto your taxable income and a new total is calculated and taxed, then obviously the higher the annual income for the year, the higher the tax margin bracket.
So when it comes to time, obviously waiting for 12 months to get that 50% discount is a big one. But there's things that happen in life that can also affect when you might want to consider selling.
Perhaps you know you're in for a big pay rise next year. It would be more tax effective to sell the property before that occurs.
Maybe you're taking a year off. And as long as the market stays hot, then adding capital gains to a year where you have no income could quite possibly save you a heap of tax. The point here is, when it comes to capital gains tax, there's the time to think before going into a deal. And there's a time to think before going to sell. That's a new one. Before selling. Bonus tip. Before we get into component 3, cost base, and get you your gift, bonus tip.
Did you know that you can offset capital gains with capital losses, even from previous years? And it doesn't even have to be the same asset type.
If you have purchased a capital asset, such as shares for example, and they bombed, you're not alone, right? And you're looking at getting rid of them. Those capital losses can be written off against capital gains. Hell of a bonus tip there, mate.
Which brings us to component 3. Cost base. Now here you can save thousands by literally just understanding that capital gains tax is not just your selling price minus your purchase price. So we've created a free downloadable calculator so you can use and play with and get your head around what goes into cost base and how capital gains is calculated. Completely free, link in the description below.
There he is again, mate. I've caught him red-handed again. I'm gonna go arrest that Macaulay Culkin. Or Macaulay Culkin. I can never get it right.
What's he doing?
Every 7 p.m. on a Friday night, mate, he goes across to his principal place of residence and pulls his little levers to make it look like he lives there, because that property is going to have a bigger capital gains on it. All right? Tax evader. He's going down.
Don't waste any time like he's about to, and don't waste money by not understanding capital gains when selling a property. If you haven't watched the 2 other videos on capital gains, you can watch them here or here.
Macaulay! Coming in.